Nvidia, on track to become the first $5 trillion company as President Donald Trump fuels hopes of Blackwell chip sales in China. Jay Goldberg of Seaport Global holds the sole sell rating on Nvidia with a $100 price target, saying there's a lot more that can go wrong with Nvidia than can go right. Jay joins us now for more. Jay, welcome back to the program, sir. 73 buys, 6 holds, your sell. Jay, what can go wrong?
Well, I think there's a lot that can go wrong. There's just not as much that can go right as well, right? Nvidia is the most scrutinized company on the planet. Investors track it down to every detail. Everyone looks at all the supply chain data coming out of Asia. We know what their capacity is. They say they're sold out this year. They say they're probably going to be sold out next year. Once you're sold out, how do you go up from there, right? There's some talk that maybe they got some more capacity, but there's not a lot of upside, right? And that's part of the reason China is such a topic of a focus topic, is because that's sort of the one swing factor quarter to quarter, as opposed to you start to look through the downside risks here is AI is. I maintain it's a bubble. No offense to Tony, who was just on, but I think there's a lot of there's only really 6 companies driving all this spend, and you sort of look through the chain of what's going on in the data center construction, electricity, supply chain, the increasingly labored financial engineering that's going into putting these deals together, and I just think there's a lot of things that could sort of throw a wrench in the works.
Jay, what if, though, the President of the United States does strike a deal on Blackwell chips? Would that change your mind about Nvidia and the price target? No,
I think that's the big swing factor quarter to quarter. They wrote those chips off 2 quarters ago. What's going to happen with their China parts? I think we all anticipate there's going to be some resumption of sales into China. So I don't think it is some upside, but I don't think it's a sort of, I don't think it changes the overall arc here.
So
China is 20% of sales, something like that. So
you have a sell on Nvidia, and you think we're in a bubble. If you think back to the .com era, Nvidia equals who?
Nvidia equals Amazon. Right? Amazon went up a whole bunch, and then it fell a whole bunch, and then it came back. And I think that's what we're going to see here too. Right? I agree. AI has the potential to be immensely powerful, and Nvidia is really well positioned for that. But I think that there are going to be growing pains. No technology this big has ever been adopted in a straight line. There are going to be hiccups. There are going to be pullbacks. I think it's just going to take us a few more years to figure out what AI is actually useful for, what it's good at, and what are the underlying business models. And there are going to be some pretty serious swings in share prices between now and then.
If it's reminiscent of Amazon, then at what level would you want to get in? Because I imagine everyone listening to this thinks, oh, Amazon, I wish I had bought that sometime in the past.
Well, buying Amazon in 1999 and then holding it probably took another 10 years for it to get back to that price. So I think there is going to be disruption in the whole AI chain. Right. And so I know that any sort of quarter-to-quarter dips, people will just buy into weakness. But I do think there are sort of more fundamental issues here around the adoption of AI, how long it's going to take, and how some of these deals, how some of these big data center things that are baked into numbers, how do those actually get built? Right. What happens if one of these major AI labs can't build their data center in time? They can't get the electricity, or they can't get the funding right. I think that slows things down. I think that, and then I think there's risks in consumer adoption. We still don't have a really good consumer AI app. And I think at some point, all of this spend has to be justified. And the return on that investment is not entirely clear in a lot of these cases.
Jay, could you just spend some time on describing what that moment of realization would look like when the other 70-plus names get what you're looking for? What does that actually look like? Because your price target right now at 100. I just wonder what the rest of the market would look like if we came down from 200 to 100.
So I probably have to review my price target. I'll give you that. But I do, like I said, I think what happens is over the next year or so, gravity just reasserts itself, right? I'm increasingly concerned by some of the financing that's taking place in some of these neocloud deals, some of these data centers. I think that's sort of almost a house of cards. In some cases, there are good companies there too, but there are just so many of these companies chasing this build. But when you get down to root demand, it's all coming from the same 6 companies, right? And I think if you push those companies on what their business case for all this massive spending on Nvidia parts is, it's challenging for them to come up with a clear, coherent business case for it, right? And in that kind of situation where they're sort of investing heavily, spending huge amounts of money based on some form of fear of somebody else getting to some unspecified destination first, that's a very heavily psychologically driven spending wave.
Yeah.
And that can just as easily that came on, it can also turn off quickly too. And so I think what we'll see, probably not in this earnings season, but somewhere in next year, we'll start to see some easing back, some lowering of CapEx, and that sort of causes everything to reset.